the UK housing market will be affected by Russia's invasion of the Ukraine. It doesn't seem very obvious, but in this video, I'm actually going to explain how the Russian invasion of the Ukraine is going to affect the UK housing market. Before we get into the video though, I think it's important to say, and it probably goes without saying, that the most important thing here is the loss of life and suffering being caused to the people of the Ukraine at the moment. Obviously, all my thoughts and wishes are with those it's suffering in the Ukraine at this time. Okay, so let's talk about the effects of the Russian invasion of the Ukraine on the UK housing market. I think many will agree that there will be an effect on the housing market in the UK because of Russia's invasion of the Ukraine. In fact, and this doesn't happen too often, pretty much all the UK newspapers are in agreement that there will be an effect. The UK economy is already suffering this year in the wake of the coronavirus outbreak and the subsequent lockdowns. Inflation is up above 5% and is predicted to potentially get as high as 7.5% this year. Now, to put that into context, the Bank of England's target for inflation in the UK is just 2%. So at some point during this year, we're going to be as high as 5.5% potentially above the target for inflation in the UK. To combat this, the Bank of England have raised their base rate twice in the last few months, and this is actually starting to have a knock-on effect on mortgage interest rates here in the UK. Both of these things historically have always had a negative impact on the housing market in the UK. So we've established that Russia invading the Ukraine is going to have an impact on the UK housing market, but is it going to be positive or is it going to be negative? Britain doesn't actually have that many direct trade links with Russia. However, the conflict is predicted to have an indirect negative impact on the UK economy. The main problem will be the breakdown of the supply chain of some of the essential fuels that we need in the UK, such as natural gas and oil. When there's a lack of supply, this generally leads to an increase in prices, which is something that we can ill afford in the UK at the moment. Rising prices and inflation unfortunately go hand in hand, and as we said earlier, we're predicted to get to 7.5% inflation rates during the course of this year. So it is likely that this breakdown in supply chain, this increase in the price of things like natural gas and oil, will actually exacerbate and speed up that process to get to 7.5%. For every action, there is a reaction, and as we said earlier, to combat inflation, the main way that we would do that is to increase our standard base rate via the Bank of England. But how does this affect the UK housing market? Let's go through the economics first, but stick around because at the end I'm going to chuck a little curveball in that could also potentially have effect on the UK housing market. Now, as I said earlier, the Bank of England have raised their base rates twice in the last few months, and most economists are predicting that this is heading towards topping off at around 2%. Depending on who you speak to, this is predicted to happen either in sometime in 2023 or potentially even 2024. However, with Russia's invasion of the Ukraine potentially having a knock-on effect to increasing rises in inflation sooner rather than later, could we see a more speedier rise to 2% in the UK as well? Towards the end of last year, when we saw the Bank of England base rate rise for the first time in ages, this didn't really have that much of a knock-on effect to the UK mortgage market. However, the most recent rise has had a knock-on effect, and we've actually seen mortgage rates pretty much across the board be increased by between 0.2 and 0.5% over the last few weeks alone. Back when the Bank of England base rate was as low as it was, 0.1%, we were seeing average mortgage rates of 1.6% in the residential market. However, if we get to that 2% mark that we're predicting we're going to get to, this is going to raise the average mortgage rate to probably around 3.2%. As rates get higher, it means that affordability for mortgages becomes that much more difficult. Effectively, as mortgage rates rise, you're going to have to earn more now than you would have done to get the same mortgage just a couple of months ago. How much you can borrow on a residential mortgage in the UK is based on an affordability calculator. Gone are the days when we used to use something called an income multiplier, which effectively would mean that if you earned, say, 100,000, the lender would look at how much you earn and then multiply that by, say, 4.5 or 5 times, and whatever that figure was is what they would actually lend you. Since the mortgage market review about 5 years ago, however, this has changed to an affordability model, which actually includes not only your income, but your expenditure as well. Essentially, a lender is trying to work out what your surplus income is and then work out if that surplus is enough for you to cover your mortgage payments with a little bit to spare. The clever amongst you might have worked out where I'm going with this. If we were just using an income multiplier sort of model, then this is not likely to have as much of an impact. However, an affordability calculator model with what's going on with the market is actually going to hit buyers in 3 separate ways. The first one, as I've mentioned, is the move from the income multiple to the affordability calculator, because now we're looking at whether or not you can actually afford the monthly payments, rather than if your income is multiplied by a certain amount, how much you could actually borrow. The knock-on effect of this is the second point I wanted to make, which is that with inflation going up, the cost of goods is also rising. So as much as we're not just looking at your surplus income now, your surplus is actually going to get lower because your expenditure is going to get higher. And the third, of course, is that you're getting hit again because interest rates are going up, which means that mortgage rates are going up, which means the cost of a mortgage per month is going up. So your surplus income is not going to go as far as it did only a few months ago. So, okay, we've established it's going to be a little bit trickier to get a mortgage, but how does this actually have a knock-on effect to the UK housing market? Well, if it's harder to get a mortgage, that means there's going to be less buyers in the market. Something that has driven the UK housing market for decades has been our issue with supply and demand. Essentially, there is a higher demand for UK property than there actually is stock available to buy. If the difference between available buyers and stock decreases, although I honestly believe that there is still going to be a supply and demand deficit, which will over time increase the price of property, what it will do in the short term is decrease this increase. We've seen a massive boom recently, and I think this is going to slow. As an example, if before, for every one property that was put on the market, there were 10 buyers potentially, the competition for that property is obviously quite high. However, now, if there are fewer buyers in the market, and let's say for every one property that comes on the market, there's only 5 buyers, that is obviously going to create less competition and mean although there is competition and there is a supply and demand deficit, the cost of a property is not going to rise as much as we've seen it over the last couple of years. So as you can see, Russia's invasion of the Ukraine is likely to have an impact on the UK housing market, and potentially not in the way we want. There's potentially going to be steeper rises in inflation due to the supply chain breakdown for natural gas and oil, more increases in the Bank of England base rate sooner rather than later, higher mortgage rates leading to more tricky affordability, and therefore less buyers in the market. But as I said at the beginning of the video, there is another reason that I think the Russian invasion of the Ukraine may have an impact on the UK housing market. Before I share this with you, if you haven't already, please do subscribe to my channel. I release new videos every single week to do with property, finance, and business. And if you're interested in any of those, hopefully you'll find something in there that will be of interest to you. So what is this other potential impact on the UK housing market to Russia's invasion of the Ukraine? Well, for as long as I've been in the game, London prime real estate has been seen as an international commodity. Some in New York might disagree, but I personally believe that the London housing market is one of the strongest in the world. What this means is people all over the world want to buy it, and that actually has a huge knock-on effect to the increase in price that we've seen in London in particular over the last couple of decades. This has generally outstripped growth in other parts of the UK. However, sanctions imposed against Russian citizens will stop them buying UK real estate in the short term. Okay, but you might be thinking, well, Sam, how many Russians actually buy UK real estate? Well, actually quite a lot historically. Russians have been buying up so much prime London property that in 2018, the Washington Post, in a news article, actually dubbed London Moscow-on-Thames. They also called it Londongrad, but I think Moscow-on-Thames sounds cooler. It's widely thought that the sanctions imposed against Russian citizens are practically just going to kill the buyers overnight. This is true, but how much of an impact is this likely to have? Over the past few years, regulation in the UK mortgage market has actually made it more difficult for those based overseas to buy property in the UK. However, many have got round that by using limited companies based in various different cities around the world. Figures from 2021 show that the country with the most limited companies that owned property in the UK was actually Hong Kong. It wasn't Russia. In fact, you have to go quite far down the list to find Russia. They were number 35. So as much as these sanctions that are being brought in are actually going to stop buyers from Russia buying property in the UK, I don't actually think it's going to have anywhere near as big an impact as some of the points that we were talking about earlier on. Many in the news have been talking about this, but honestly, I don't think it's going to be a problem. For me, it's the economic impacts that are going to cause the most significant change. In summary then, I do think that the Russian invasion of the Ukraine is going to have an impact on the UK housing market. Breakdown in the supply chain of essential fuels such as natural gas and oil are obviously going to increase the price of those commodities. This will then have a knock-on effect in the UK in terms of inflation, where inflation could rise sooner than we first predicted. This will then have a knock-on effect to the Bank of England in terms of the base rate rises, which are predicted to happen over the next couple of years, but could well be brought forward, and we could even see rates of 2% maybe by the end of this year as a result. As the Bank of England base rate rises, of course, this is going to have an impact on mortgage rates, and the higher mortgage rates are going to get, the more difficult it's going to be for UK buyers to afford the mortgages that they would have done just a couple of months ago. This, of course, will lead to a drop in the number of buyers in the market, which will reduce the supply and demand problems that we have in the UK. And although I don't think that property prices are going to dip hugely, they probably won't rise as much as they have before. Thanks everyone for sticking around to the end of this video. It's massively appreciated. If you haven't already, please do subscribe to my channel and click the like button below, which helps me grow this channel and makes me reach more people. Don't forget to stick around just for a couple of more seconds, because YouTube is about to recommend to you a couple more videos that they think you're going to enjoy. Thanks for watching. See you soon.